Hello guys, this is FX Bright, the trade guru. So on this video, I'm going to be teaching you guys how to trade the head and shoulder pattern mechanically and with precision. It has nothing to do with your emotions, just exactly how you're supposed to take it. With your eyes closed, you can even take it with precision. So if that's something you're interested in, please like and subscribe and turn on the bell notification. And also I have my WhatsApp number in the description of this channel, so if you want a one-on-one mentorship, do contact me. All right guys, so let's get into it. The first thing we want to understand is, what is a head and shoulder pattern? Okay, so what the market does is that the market buys up, for instance, maybe an uptrend was happening, comes down to a certain support somewhere, then buys up again to break the previous resistance, then comes down again all the way to this support, then buys up again all the way to this resistance and come down to break this resistance. Now what you can see is that the market looks something like a head and shoulder, right? So you can see it looks like a guy, right? Or somebody with head and shoulder. So that is what's called a head and shoulder pattern. So for those of you who are new, the what you try to trade in the head and shoulder pattern is not everything. You're only interested in the last leg. In other words, this particular leg that hits this support, that hits that resistance and starts selling down. So some people take it at the break of this neckline. When the market breaks this neckline, it will make a retest on that neckline and push down. So they are interested in either here or here, right? So they are going to be selling the market. So these kinds of patterns are often called reversal patterns. The reason being, if you take the first leg, for instance, the market was going up, so it's most likely an uptrend. So what you're going to see at the top of the uptrend is this type of patterns. There are two major type of pattern you can see at the end of a trend. It can be either the double top, where the market now finds two top and start coming down, or you can see this head and shoulder pattern that we're talking about. So the market comes to that top and finds something like this and start coming down. Do you understand what I'm saying? So we have that head and shoulder pattern. So I'm going to show you guys exactly how I take my head and shoulder pattern trade. So if you look at this particular chart, what you will find at the top of this market move is that the market came all the way to the top, made some support and resistance. You can see something that looks like a head and shoulder, where this whole place, probably the shoulder, the hand or something like that. Then you have this one coming here, market coming all the way to this top, coming all the way down to this around the same point, coming buying back to this side and dropping. So you can see this market looking like a head and shoulder. But the problem most people have, that I've noticed even amongst my students, is that they do not understand where exactly is the impulse leg. The first leg of the head and shoulder all the way down to the top before the first shoulder is called the impulse leg. So now the problem that most people don't have is they do not know how to identify the impulse leg. So they believe that this whole long leg is the impulse leg, but that is not how to trade, guys. You have to trade with very apt precision, and in this video I will show you how to do it. Now there's a mechanical way for you to determine what exactly is the impulse leg, because this is very crucial. Sometimes you can think that the whole full impulse leg is from here to here, and then you'll be expecting the head and shoulder to make the second shoulder all the way down to this particular point to complete the leg. And sometimes you may see it just come here and start moving up again, and this was a very good head and shoulder, but you missed out on the key details of what it means to have a head and shoulder. So I'll show you exactly. But of course you can be in a good position sometimes where it just still comes down for whatever reason, but I'm trying to make you understand how to trade with precision. Now the first rule to understand about the impulse leg, or let's say the first shoulder, is that this particular shoulder must be a valid retracement, right? This particular shoulder must be a valid retracement. So the question is, what is a valid retracement? And if you watch my previous videos, when I talked about retracement, you will see when I said a valid retracement is that retracement that at least hits hits the 32.8 Fibonacci, right? So I'm going to take out my Fibonacci tool just to test that retracement to see if it's valid. Let's assume I do it from this bottom and I stretch it all the way maybe to this point. I want to show you guys something just from here to here. Now you can see that the market came all the way to the 23.6 Fibonacci. So I will not consider this retracement a valid retracement. It is not valid. It's only valid when it gets to the 38.2 Fibonacci. Now let me stretch it all the way to this top, to this and the top of the shoulder. Now this is the top of the shoulder. You can see what the market did before coming down. So you can see this is where the head and shoulder is. So I stretch it all the way from the bottom. Let me make it align very well. So I stretch it all the way from the bottom to the top of the shoulder. Now you can see where the retracement happened. You can see that this is not a valid retracement. In other words, I will not be able to trade this as the impulse leg of this head and shoulder because this retracement of this shoulder is not valid. However, if I want to trade these if I want to find the impulse leg would be that leg that made the shoulder a valid retracement. So if I put the Fibonacci from this particular point and stretch it all the way to the top, from this zone to the top, you will see that this retracement was around 50 Fibonacci. Therefore, validating this shoulder as a very good shoulder. Remember, let's assume the market was still here, somewhere around here. You wouldn't have known about all this full place that happened, but at least you've been able to validate that this particular retracement is a valid retracement. So any day the market goes up to break this resistance, gets to this point and starts coming down, at least you validated that this particular leg is a very good retracement. So you're going to be patient to see what the market will do when it starts coming down. Now the next thing you want to do whenever the market gets to wherever it's going to and starts coming down, you're going to have to validate this leg. Remember, we've been able to validate the shoulder to know that it's a very good retracement. Now the market has gone all the way to this top. We have to validate this top to see whether it is a very good top to be called a head and shoulder. So what we're going to do, we're going to take out the Fibonacci to measure the top. Now when we measure that top, we want the top to touch at least the 129 Fibonacci. We want the top to at least touch the 129 Fibonacci. And you can see in this chart that the top of the wick of this candle just touched the 129 Fibonacci, making the stop a very valid retracement point. The reason being that if the market didn't touch this 129 Fibonacci, it's possible that when the market gets here, it's just going to come down as a double top, not exactly as a head and shoulder. So anytime we see that the market goes all the way to touch the 129 Fibonacci, even though it's coming down, we will be skeptical. We will not take this trade as a double top because it got to the 129 Fibonacci. So on coming down, we will know that the market is probably about to go up again. So you can see what I'm talking about. So now we've been able to validate that second leg. Now the next thing we need to do is to validate. Now as the market starts coming down, the only condition for this particular leg is that the market will get to at least the neckline. So we're going to put a zone on this neckline just to validate it. So you can see how the market started coming down, and some people would have come here to trade these as a head and as a double top. Meanwhile, it's a potential head and shoulder. So how would you have differentiated that unless you had your Fibonacci to test this point? If you're able to test this point, even though the market is coming down, you will be able to know that it is potentially going to still go back up to form the head and shoulder. So what the market did is that the market touched this point, ensuring that this leg is now valid, and started going up. Now when the market is now going up, now this is the final thing we want to achieve before we can be able to take our sell down. Now, before we're going to take our sell down, you can see that this market started going up. As this market was going up, what must happen to this particular leg is that this leg, we're going to take our Fibonacci, and there is something we need this leg to do. We're going to draw the Fibonacci from this top all the way to the bottom to test this last leg. Now, what we want from this last leg, so when we draw the Fibonacci from this point to this point, we're going to ensure that this particular last leg does not close above the 88.8 Fibonacci. The reason being, when this market goes all the way to the 88.8 Fibonacci, we're going to assume this to be a triple top, not exactly a head and shoulder, and there's a way we trade that. So for this particular head and shoulder, the market comes down and gets to the 78.6, but does not close above the 88.8 Fibonacci. As long as this has happened, then we have concluded that this is a valid head and shoulder. So we're going to come into this particular point, go to a lower time frame, and find a very good entry. But what we're going to do is that we're going to find one more confluence. We're going to put this zone area so we can be able to see that the market got to the shoulder, and we're going to draw a line just to test these zones to see how it goes. Now you can see that what we try to achieve is to try to see that this particular last leg is a retest of the break of structure. For instance, when the market got to this point, came down, got to this point, you can see that the market breaks structure. When you draw this line from here to here, you can see that the market broke structure. So the last leg is actually a retest of the break of structure. So once you see that happening, you can come to this very good resistance, which is a confluence between this line and this one around this certain place. Remember, it's not about the point, it's about the area. So as the market got to around this same place, you can come here to find a very good sell. Go to a lower time frame and find an absolutely good sell. Now guys, there's a way I take my very entry with precision. I do take my personal trades with apt precision. So if you want to learn how to take trades with apt precision, you can contact me. But of course, you can even just take away these particular knowledge and do it the way you know how to do it best. Now you're going to take a sell and the market will come all the way down. Now the reason why we need to understand this particular impulse leg is because some people would like to take this trade all the way down to the last point down there, but that is not how to do it. You have to take the sell all the way down to the beginning of the impulse leg. So that is why it was important for us to determine this as the main impulse leg, not the one from the bottom. This was the main impulse leg. So when we take the sell, we can take the sell to this particular point. Now we can now decide to trail our stop loss all the way down to wherever we will determine. So you can see, but this is supposed to be our main exit. Then we can hold some trades to trail the stop loss, all the way down to where we can make maximum profits. And so guys, take a look at this particular structure. You can obviously see that this was a very good head and shoulder pattern where the market made all these moves. So what we're going to do, like I said, the first thing you want to do, so let's assume this is where the market was and all these places have not formed. What we want to do when the market came all the way from this place to this place, like I told you, we want to be able to test this shoulder to see if it's a valid retracement. So what we will do is that we'll get our Fibonacci. Now just for me to show you guys what I'm talking about, if you think this is the full leg of the impulse leg, if you draw the Fibonacci all the way from this point to this point, what you will see is that this point didn't touch the 23.6, and what we said is that for a leg to become valid, for a retracement to be a valid retracement, it must touch the 38.2 Fibonacci. So even this one, it didn't even get to the 23.6. So this is really laughable to be called a retracement. So what we will do is that we were going to find the impulse leg that made this retracement valid, and that will become the impulse leg for our head and shoulder. So I'm going to delete this one from here. So what you can see that if we make a retracement, if we take the impulse leg from this point, what you're going to see is that the market came down and touched the 38.2 Fibonacci, got to the 60, came all the way down to this point. As long as it has broken the 23.6 and does not close below the 78.6 Fibonacci, we'll consider this whole move a retracement. So this is a valid retracement because it touched the 38.6. So we've been able to get the first leg of the head and shoulder, right? So the next thing we want to do is that what the market did is that the market started buying up and broke this resistance and started going up. Now the market got to wherever it was going to and started coming down. Now because it is coming down, we would have to test this top to see whether it is a valid top for a head and shoulder. So we're going to delete this one. Then we're going to take on the Fibonacci again. We're going to draw the Fibonacci from this point to this point. Now remember guys, when I was drawing the Fibonacci for this shoulder, I drew it from the impulse leg, from the beginning of the impulse leg to the end of the impulse leg to get this retracement. Now to get this top, I drew it from this top of the shoulder to the bottom of the shoulder, so I can get this particular place. And what I said about this place is that this one must break through, must touch the 129 Fibonacci. Anywhere it gets to here is fine, but at least it must touch the 129 Fibonacci. And you can see it broke through it and even got all the way to the 161 and started coming down. So this is a good head, right? This is a good head. So the market started coming down, and I told you to validate this particular move, all we need is that the price should get to the neckline, and you can see the price got to the neckline, so that leg is valid, right? So now the next thing we want to do is that this helped us to, when the market came here, we're not expecting, even if it broke out, we're not going to trade this as a double bottom. We know that the market is potentially about to form a head and shoulder. So when the market got to this neckline, you can see that the market started buying up again. Already, we know that the market is about to form a head and shoulder. So what we do, like I said, we're going to mark the zone area for the shoulder just to have understand the movement of the market around that place. And like I said, when the market got to this point and started coming down, that is when we are going to validate this shoulder to see if it is what the head and shoulder trading. So what we will do is that we'll pull out the Fibonacci and draw the Fibonacci from this top of this, the head of this, the head all the way down to the second shoulder, right? And I told you, when you draw it all the way down to the second shoulder, you have to ensure that this second shoulder does not close above the 88.8 Fibonacci. And once you can see that, obviously this one closed below the 78.6, so it's making it a valid shoulder, and it's touched this other shoulder. So as long as it has done that, everywhere is really good. So what we're going to do now is to take our entries. Like I told you, you can see how this market actually went. The market came all the way to this top and sold down, and you can see there's a reason the market didn't sell all the way down to this point. Is because the real impulse leg is not all this leg you see here. It's not all this move here. It's just from here to here, and we're able to validate it by validating the neckline. So when the market started dropping down, it dropped down to only this point, didn't come down to all this way, and started buying up, right? So, and I always told you guys, for you to find a very, 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 very interesting entry, once you draw this line all the way to this top, you're going to see that this market broke structure, and this particular move here is a retracement, is a retest of this break of structure on these lines, and this will become a very good confluence. Now listen guys, there is a very accurate way of taking this trade. This is also accurate as it is, but there are different very good accurate ways to take this trade. So you can go to your lower time frame, find a very good entry and take your sell position. And so guys, we're gonna take this last one just to see what happened. Now you can see that this whole market, what it formed here, was basically a triple top. I don't want to go back into all the details I just explained, but I just want to show you guys something. What you can see is that this particular this second leg here, that is supposed to be head and that's supposed to be the head. If this was a head and shoulder, this is supposed to be the head, right? You can see how this head didn't get all the way to the 129 Fibonacci. Obviously it didn't, right? If I draw the Fibonacci from here to here, you can see that here didn't even pass the 100, right? So because of that, when the market was coming down, we would never have looked at this as a head and shoulder, and you can see how the market didn't do it. Even when the market started going up, there is no way we will trade it as a head and shoulder. Reason being that you can see how this last leg even broke through the 88.8 Fibonacci. So if I drew this from here to here, you will see that this last leg was able to break through the 88.8, making this an invalid head and shoulder. So we will never have been able to trade this as a head and shoulder. So this just help you to know how to confirm mechanically what the head and shoulder pattern truly is. So guys, I hope this video has been really helpful, and I don't know why you haven't liked the video and subscribed, and you've listened to the video all the way down to this point, and I know you got value for your time. So please like and subscribe and turn on the bell notification. All right guys, so I'll see you guys in my next video.